It's breakfast. It's 21 minutes past 8.
The markets on Dubai Eye 103.8.
With PolicyBazaar.ae. Get the best health insurance with expert advice and worldwide coverage, starting from just 4 dirhams per day. Learn more at PolicyBazaar.ae.
A bit of breaking news for you. ADNOC Gas in the last few minutes reporting a 7% increase in quarterly profit. It has reached $1.3 billion. We've got the Finance Director, Peter Van Driel, joining us live in about half an hour.
Commodities.
With EGA, Emirates Global Aluminium, producing 1 in every 25 tonnes of aluminium made worldwide, right here in the UAE.
Right, a bit more breaking news for you. We've got both UAE and Saudi PMI, Purchasing Managers Indexes, that have been released in the last 2 minutes. And both of them start the reports. Their top headline is jobs. In the UAE, employment rising at its fastest pace in 11 months. The guys at S&P saying that companies are looking to reduce their workloads through hiring growth. If I have a look at where we are with the Riyadh Bank, Saudi PMI employment growth rising to the joint highest in over a decade. Both of those reports coming well over the expansion contraction mark of 50 to show that the economies are growing. 55.6 for the private sector in Saudi Arabia, 54 here in the UAE. More than I can say for oil, which is in the red this morning. We've fallen below $56 a barrel, 55.93 for WTI.
You're listening to the UAE's #1 talk radio station.
This is the Business Breakfast
On Dubai Eye 103.8.
Speaking of numbers, a man who has some. The Managing Director of Dubai Duty Free, Ramesh Cidambi, is in the studio. They've just had one of their best months ever. Ramesh, it's lovely to see you. Good morning.
Thank you, Brandy. Absolutely fantastic to be here with you and Richard and Tom, and especially since we had a fantastic April.
You did. So it's the best April you've ever had. It's the fourth best month of any month
Yes.
since Dubai Duty Free was founded.
Yes.
Why this month in particular?
I think it was a combination of factors. The first was that the Ramadan moved by 10 days, to the month of March. So the whole of April, we didn't have Ramadan in comparison. The Easter travel was very strong, during the Easter break. And the Arabian Travel Mart and the events in Dubai contributed. A big thank you to His Excellency Hilal Al-Mari and the team at DET for driving the traffic into Dubai. And with these big events, we always see a bump in the business. Plus, we had a very strong Eid, Brandy. Eid this year was 24% better than Eid last year, even though on a Ramadan to Ramadan basis, it was flat. And what I'm really happy about is that the sales were up 18.5% to 703 million dirhams as compared to 600 million last year in April. But the passenger numbers are up 14%. So we did better than the passenger numbers by 4.5%, which is remarkable considering that last year since March, April, we have been lagging the passenger growth in terms of sales growth. So really happy with the performance. All the major categories did well. Confectionery was up 84%, thanks to Dubai Chocolate, which is still doing about 1 million a day. Liquor was up 13%, perfumes was up 16%, tobacco was up 24%. The fashion sector, all the luxury boutiques that we have, Louis Vuitton, Cartier, Dior, Chanel, they have been lagging since March, April of last year. But this month, they were 12% better than last year, April. So very good performance across the board and great work from the team. When we say all these numbers like 713 million to 23.7 million a day, 60,000 transactions, it also means that our technology, our logistics, our ability to deliver 600, pallets of merchandise a day to fulfill the orders from the shop, all those mechanisms are working well. And the team is doing a fantastic job out on the shop floor.
It's particularly interesting, given the interview that we had with you almost a year ago.
Yes.
It was your first interview. In fact, it was your first day as
June 3rd.
Managing Director of Dubai Duty Free. And you told us when you moved into the job you were a little bit worried about some of the numbers.
Yeah.
What materially has changed? What has driven that change in direction?
I think firstly, we focused on the renovation and refurbishment in the shop floor. We renovated all the arrival shops, for example, in Terminal 1, Terminal 2, Terminal 3. We renovated the liquor and tobacco shops in Concourse B. That has helped. Then we have pushed very hard in terms of service levels in the shop floor, in terms of staffing on the shop floor, incentivizing the people on the shop floor to sell more. So it's a combination of improving the retail offer, better service, and the traffic at the airport. I think all the three things have contributed. There are some headwinds in front of us. I don't deny them. And, the word geopolitics comes to mind.
Yeah.
And there's a lot going on in terms of the tariff situation, in terms of what's happening in China. China is still a very weak market for us. If you look at all the regions, we are up about 40% to the Middle East. We are up 25% to Europe. We are up 17-18% to the Indian subcontinent. But Far East, we're only up about 1.8% this month. And China is down 8%. So China continues to be a concern for us because it was 17% of our business pre-COVID, and now it is 7 or 8%.
Okay, let's look at those macro factors.
Yeah.
One of the things you said when we spoke to you last year, you suggested that higher flight prices might be keeping the spend down.
Yes.
People very mindful of travel costs. Flight prices are still high. Have we just got used to it?
I think we've just gotten used to it. And it seems to be, during last year, Brandy, in May, June, July, we were quite concerned because of the gap between the passenger numbers and the sales growth. And that continued for the whole of last year. And it started getting better in November, December. So I wouldn't say that problem has gone away, but I'm just happy that April we did well in spite of high fares and in spite of the other headwinds which are there. And May continues to be very strong. May we are up about 25%. It's early days yet, but May continues to be strong, and we'll see how the rest of May develops. That will be a good barometer for us. What you said earlier about oil prices being down $56 to $56, we need to watch the oil price. We need to see what happens in terms of economic conditions abroad, and we need to see what happens in May.
What could tariffs mean for you? There's all sorts of knock-on implications. The US travel numbers, Europeans into America are being hit. KLM, Lufthansa saying that. What are you watching? What could be a problem for you?
We are watching two things. One is whether the US economy goes into a recession, and whether other economies like Germany and others, whether they follow, and the continued drag from China, which is very important for us, because the Chinese consumer was already nervous before the tariff war, and will even more want to pull back, now that, the trade situation is complicated. So we are continuing to watch that. On the plus side, whether the tariffs will have some benefit, because duty-free is seen as, duty-free, and you may have a slight advantage, we'll see. For the month of April, Brandy, the sales to the US alone was 8.5% higher than April of last year. But I think it is too early to say anything in terms of the direct impact of the traffics, but the economy and the consumer sentiment and the consumer spend is what we are watching closely.
What is the continual records that gold prices have hit meant for your gold sales?
The gold prices means the turnover is up. In revenue terms, we are up 35% this month in April, but the quantity of gold sold is dramatically down. So the quantity of gold sold, for example, January to April is down 20%. So that worries us, that if people buy less gold, that's a problem. And people tend to buy gold when the prices are increasing, but I think now it is sort of reaching a tipping point where there's more nervousness about whether the prices will go up even further. So now I think it is starting to moderate, that trend of buying more when prices are rising higher.
30 seconds, can't let you go without the other gold bar, the chocolate bar. You mentioned the numbers there. What are the logistics like for getting that in?
What are the
logistics like? Can you get enough of it?
Yes, we can get enough of it. We have 5 brands. We have Locali, we have I Love Dubai, we have Samha, we have Fix. We have a collection of brands that are Al Nasma. So between the 5 brands, we are able to satisfy the requirement. And the demand is still very strong. We keep thinking it will weaken at some stage, but it hasn't done so far. Still selling 1 million a day, Brandy, in chocolates.
Ramesh.
And it's about 40% of our total confectionery business. And if you compare
just the Dubai chocolate bar is 40%.
Yeah. And 4% of our total business.
Wow. Okay, Ramesh Cidambi speaking to us this morning, the Managing Director of Dubai Duty Free. Thank you for your time.
Thank you very much, Brandy. Thank you.
Your ARN News.
Good morning, I'm Serena Kelly.